Welcome back to Golden Rule Radio. It's so good to be back. The crew's all here. Robert, Miles, and Tori are back in action, and Miles wants to get to a listener question, which we occasionally do.
Well, wait, hold on. I got to put my mask back on.
Oh, yeah. My voice was coming through a little too clearly, wasn't it?
Yeah, you guys were definitely missed, and it is good to have you back. And Eric did a great job last week.
Great job.
And on that show last week, I did want to bring up what I think is a pretty fantastic summation of the thoughts going on within this office, as well as a lot out there in the listener base. So Jacob added to our comments last week, endless consolidations and retests. Is that how it works for Apple and Tesla? After 40 years of massive currency devaluation, gold's purchase power is less today than at the 1970s $800 peak. POMO, repo, 0% interest, QE infinity, corporate bond purchases, ETF purchases, all while American cities descend into the violence of a communist coup. The United States has undertaken the greatest currency expansion in the history of the world while we are being conditioned to accept further declines in gold as normal and healthy. I wonder sometimes if monetary philosophers have lost sight of the forest through the trees.
Really, really good quote. And all the underlying fundamentals that he talks about are each in standalone fashion a reason to own gold right now.
Right.
And yet you've got all of these compiling in one economic and geopolitical storm. And you're right. At what point, though, does gold just get unleashed? We did see it go parabolic in 2010 and 11, probably set up for something similar. But in terms of his points, strong points as to why you own gold.
Right, and I think two things about this really jumped out at me. First and foremost is I think at least anybody who does what we're trying to do, and certainly the three of us, we don't want to fall into the trap of becoming monetary philosophers, because there is genuine day-to-day real action that needs to be paid attention to. We do a weekly show. We talk about charts more from the standpoint of it's a good representation of the psychology of what's going on in the markets. At least that's what I find interesting about it. And then the second thing is more of a tangible thing, and that's the fact that, yeah, we may not be at the same purchasing power of those $800+ gold highs in the late 1970s. And I think what that says is gold has a lot of room to go.
That's right. That was an anomaly back then and far more market speculation with less control and manipulation. But here we sit at just about 1,800. We're $1,000 over that 1970s high, and that's still quite the preservation of purchasing power.
Yeah, so let's jump into the charts. May and June are not typically great months for gold, but as we finished June this week, gold's been doing all right and been sliding higher. So in months that it really shouldn't probability-wise be going higher, it did. And I think that's speaking to all the points that Jacob listed, all the things we've been talking about on this show, and all the reasons why you should own gold is that in a time when gold shouldn't really be going up, it is. And so in a time that it is supposed to be going up, August and September, we're 30 days away from that. And come August, I think you want to be in the gold market. So we've been talking about a pullback here. We're going to look at the charts and see, do we see some kind of weakness? We are today, Wednesday, as we're recording. We're hoping for some weaker prices, but it just doesn't look like it wants to come down. So before August, I think you need to be in because that's when the probability would tell you gold's going to go higher, August and September. So you got about 30 days.
Yeah, we're hoping for those lower entry points. That's why we're hoping for this pullback, right?
Right.
We're talking strategic, technical stuff to step in and add to ounces, but we are at an 8-year high. To your point, June actually crossed the barrier, and now we're at an 8-year high. And really what June did, too, was bring the quarter to a strong close. So, Miles, I know we keep saying we're going to get to the charts, but from a quarterly standpoint, from April 1st through the end of June, because we're now early July, gold closed at $1,781 for the quarter. And that's up 12.3% for the quarter. Silver closed at $18.30. That's up 29.7% for the quarter. Platinum closed at $829, up 14.5%. So those have been our three strong recommendations. We have said stay away from Palladium, and in fact, Palladium finished the quarter down 14.6%. So let that be sort of a transition, Miles, into the charts.
Well, before we go to the charts,
That's going to be the running theme of today's show, isn't it?
I have to say the cat might be out of the bag with gold. It's sliding higher.
Oh,
Market
I sure
participants,
hope not yet.
But maybe, I mean, in months that it's, supposed to be boring and maybe slide lower, it's sliding higher, and there's enough buying driving it higher in these months. And so these people who have been paying attention to what's going on, they look at what the alternatives are for owning the dollar, owning stocks, owning bonds, and here you are with gold rising. And so the cat might be out of the bag already.
Yeah, what alternatives do you run to?
That's the good question.
Yeah, I totally agree. And you said be in by August.
You might already want to be in.
Yeah, and not because I thought, oh, okay, we're going to hit an 8-year high in June. I just thought with the quarterly numbers that are going to be coming out starting next week, that to me is going to be the impetus for a rollover in the equities markets. It's not just corporate earnings, it's fiscal government numbers coming out. And the reality of what's transpired from the pandemic shutdown, it's going to be uglier than I think people realize. So with further ado, maybe we get to the charts.
Well, you've been talking about that this quarter too for a couple months now. How it's going to be the one that rocks the boat a little bit. Yeah. So we'll see.
If it doesn't, it's a masterful job of manipulation of the mindset and
well, that's never been done before. I don't know where you're coming up with that. All right, charts, Miles.
Oh, you guys want me to talk now?
Sorry.
You're fine, man.
Let's start with palladium. Let's start with gold.
So from a macro perspective, this idea of waiting for pullbacks obviously is irrelevant. We understand that a lot of our crowd, a lot of our listener base, our clients, are gold owners, and really this discussion about short-term micro movements in precious metals has more to do with where do I increase my position at. So do keep that in mind. If you're not sitting on a precious metals position, you really shouldn't care about $50 up or down at this point. And I think Jacob lays out a fantastic argument for that. All of these chickens come home to roost eventually. So with that said, and looking at our seasonal strengths and weaknesses, June, July, probably a little bit different than we expected. May and June certainly were. So gold did push up to the $1,800 mark and is showing a little bit of toppy action. You've got some RSI divergence there at the top, but we've had a fair bit of that going backwards. And we keep building these kind of tabletops, right, where we take a step up, we build a new trading channel, sits there for a few weeks, a few months, then take another step up. And we could just continue that pattern for a while. Eventually, Robert, like you suggested, maybe the cat's out of the bag. Maybe the jig is up. And we saw that happen in 2009, 2010, when all of a sudden gold goes from 1,200 to 2,000 almost in a very short period of time. Silver went from 15 to almost 50 in 9 months. So eventually, people jump on the bandwagon. We're obviously not there yet. So I'm still going to be talking about regular market moves in the charts until it doesn't matter anymore. The reality is markets act naturally until they don't, and until they start showing unnatural behavior, then it's still worth having the conversation, because I included have a little bit of cash I may want to buy in at $16.75 if we get the chance. So with that said, let's make the bold assumption that we have a reversal from here, which we've given numbers before. If we do see a turn down, I would put our first potential stopping point at around 1660. That's the old low from the April, May, June tabletop sideways trading pennant that we built. Beyond that, probably my favorite number is still around that 1580 if we had a big substantial drop back down in gold. Now, if we continue up, I would argue our next high side target is around 1850, and then we'd readdress from there.
So this is actually a fascinating discussion because it gets to the core of how variables can impact the price, right? And this gets down to what we joke about all the time, the technicals versus the fundamentals. Unfortunately, the reason I think that we're up in June, and that's normally not the case, is we're in uncharted waters. We're in this unprecedented economic landscape, and so everything can go out the window, including the technical analysis. So I'm not trying to minimize it or negate it. I'm just saying don't be surprised if we never do see this pullback, if these second quarter numbers are as bad as we think they might be, and you see the COVID-19 effect continue in extended fashion as you get these increased cases going on now, as Jerome Powell and Secretary Steve Mnuchin both testified to the House regarding. The full expectation is we may have a further slowdown of the economy. This is going from recession to depression really fast. And unfortunately, that's going to wash away some technical analysis.
So moving over to the more industrial metals, silver to me looks real strong. Silver put in a higher price today, higher high since the end of May highs, right there at around 1850. Now it was only by a couple pennies, and we're still within this like multi-month long-term channel up above. But after the big March drop, we've recovered most, if not all, of those losses at this point. I think silver takes another step up. I think that step up pushes us above 20, and then we'll have to see if we have any type of pullback from that. But the reality is eventually, like we're hinting at today, it seems to be the theme of the show today, eventually you throw it out the window. Eventually it just doesn't matter anymore, short-term moves. So if we're going to continue that, I'd like to see silver push up above 20 on this next move over the next couple weeks. I think that would happen probably, as Robert was saying, sometime in August, and then we can readdress from there. I don't see things getting too crazy leading into the election, but then following the election, obviously the game's on, depending on how November turns out.
Yeah, 1950 on silver and 21 are the previous high numbers that once we get through those numbers, you just need to own it. So being able to buy it here in the 18 level with spot, even if you're paying a couple bucks over that for something divisible like junk bags of silver, it's still worth buying, because I think once we get past those little barriers, it technically turns bullish, and then you've got all the fundamentals behind it that's going to follow gold and catch up.
I'm glad you brought that up too, because we have seen premiums soften. So
yeah,
supply has increased, right? We have better access to certain products, and premiums have come down between 15 and 20% on some products.
Yeah. There for a while, those spike in premiums just almost made it difficult to buy physical silver.
Or justify it.
Justify it, yeah. But now they've somewhat normalized, and so good time to do something.
Yeah. I mean, getting in now is like somebody getting in a couple weeks ago as if silver was $2 higher. That's how
true.
Much the premiums moved in your favor.
That's true.
Looking at platinum, I called for a 3 drives up in platinum last week, pushing us above 1,000 as my next assumed target. We had a breakout in the last couple days, which doesn't guarantee it's happening, but we did put in a higher low and a higher high, and we're above the previous declining pennant channel. So if we get higher from here, let's say we get up to around 880, 900 on the platinum price, you can argue we're starting that next leg up, and then I would say also by August, we should be looking at above 1,000 on the platinum price.
Yeah, I like platinum. I like what it's been doing. I mean, if you go back about a year, platinum was building this nice trend line higher, building a nice base. It got above 1,000. It looked really good. And then COVID happened. And so everything just got slammed down to like $600, and it's back up consolidating above 800. So what stops it from going back to where it was just at the beginning of the year at 1,000? I don't think anything really stops it. I think, and once it gets back above that previous high of a little bit over 1,000, it's probably ready to go.
Yeah, it'll be fun to see if palladium lowers that ratio,
right,
and moves in favor as platinum climbs. If we can get that decrease in palladium, which I'm sure you want to talk about.
I can't thank you enough for bringing up palladium next.
That's what we should start
on the
with.
Heels of platinum.
Without further ado, let's get to the charts.
Yeah, palladium does the same thing, just on the other side. Like, we had the big drop in palladium along with everything else. The difference is palladium was already at all-time highs, so it was coming the other direction anyway. Just like platinum had broken above that pennant and now has come back and retested it, looks like it potentially could be taking another step up. Palladium put in a lower high and a lower low, which it hadn't been doing. It had been compressing, you can see here on the chart, and it is broken below. So one of two things is happening in both platinum and palladium. Either they're setting up their next big swing moves where platinum's going to jump up $300 or $400, palladium's going to come down $300 or $400, and now we're at like 1.2 to 1 on the ratio. I mean, that's a pretty massive swing just in the last couple months to go from palladium 2,800 and platinum at 800. Down to an almost 1-to-1 ratio in a very short period of time. So if we see this continue, that would be a pretty fascinating target just to see how consistently these ratios do eventually come back to their means. So since I have my co-experts in the room today, let's transition over to my co-King Dollar, or the solo King Dollar of Golden Rule Radio. Robert, welcome back. I'm going to hand you a dollar chart, and you can tell me what's going on with the other alternative to investments that it seems like nobody wants to own right now.
I mean, how many $1 trillion does it take to drive the
To
dollar
screw
down?
in a light bulb.
I mean, yeah. It's just
10 and counting.
The psychological barrier has been broken with the politician reaction to any crisis is to just print more money. I mean, they've just broken that barrier. Where do they stop? How do you go back?
They're
from
trying
that?
to outspend each other at this point.
Right. And so we've broken that psychological barrier. The dollar has come down off of 100. It's bouncing around here. I think we need a little bit more data before we can tell which direction I think is the next bigger move. Yeah, I think, Tori, you're mentioning if the equities market sells off, the dollar might rally.
But the bounce looks so weak.
It does.
It's just there's no strength behind it.
Yeah, so how many more $1 trillion does it take to drive it farther down? I think ultimately the dollar is headed much lower. But in the short term, I think, again, we need a couple more weeks before we can tell which direction it really wants to go. But it does look weak.
Well, I'd say how many more trillions of dollars does it take to keep the Dow propped, to keep that dollar going down? There's another segue for you, Miles, in terms of the equities markets. But, man, they're throwing trillions at everything.
Well, and they got the Dow up pretty close, right? They got the Dow pretty close. Throw a bunch of gas on the fire, get the Dow back up over, or at least to around 28,000, which actually was above, if you look at the fib numbers on the drop we had back in March, above the 786 fib. So it was a pretty healthy correction back up. Problem is, it just looks like it's running out of steam. I mean, we came back down to the 618. That's right at 25,000. We had nothing of a bounce off of the 618 to try to propel us back up, and it's just fizzled back down to that level for a second time now that we're pushing into July. What happens if the Dow falls off the table? Is there still enough investment capital in the equities market today that comes flooding out of equities and going into the dollar? So there's another example when you can end up throwing charts out the window, because if we have a mad panic out of equities, that money is going to go somewhere short term. And I think eventually it floods into real capital like gold.
Yeah.
But you can't go Dow stock. You can't go contract to gold. You have to have that currency intermediary between the two. So maybe we do get a reversal up in the currency market.
That would be the only reason, honestly. And if the equities do roll over aggressively like that, and we're headed on towards this W correction instead of a supposed V, all signs are pointing that way, both from a COVID standpoint. And again, we've got economic numbers that are going to start rolling through. All that being said, you're going to see the metals stay strong. In March, when the equities turned down, the metals turned down initially with them on that initial dollar rally. I think you get a dollar rally and a metals rally at the same time. I think silver might pull back a little more than gold, but that's what I think happens is the metals and the dollar stay strong. There's far more money moving into safe haven assets right now, and you're just not going to see it pull back.
Yeah, you can call the Dow an X correction and take out a red pen, draw a big fat Sharpie X over top of it because you don't want to be investing in it.
There you go. The front of the Wall Street Journal really tells you all you need to know, too. A lot of what the equities market rally is about is, again, manipulating the mindset of the investor to try to convince everybody to not miss out, right? Well, this headline, stocks end best quarter in decades. Defy crisis. Okay, best quarter in decades, and we're still not at even close to the previous highs that we set before in the previous quarter.
It's all about perception, right?
It is about perception. Now, somebody at least puts it straight from Schwab in this article. Liz Ann Saunders says massive stimulus by the Fed and on the fiscal side has propelled the stock market's recovery at a speed unlike what we've ever seen. So that's the reality. So why are you going to get sucked into it? Why are you going to buy into that when you know that it's merely the stimulus that's done this? It's not the Main Street investor, but for them to say it's the best quarter in more than 20 years, okay, true. But what were we coming from and why did it happen?
How did we open our show? So let's go back to Jacob, the end of Jacob's quote here. I wonder sometimes if monetary philosophers have lost sight of the forest through the trees.
There you go. Let me tell you some real numbers. Okay, here's a few more trees, but this represents the forest, all right? National debt now this quarter increased to over $26.3 trillion. The U.S. debt to GDP ratio now is at 132%. 47% of employment-aged U.S. citizens are unemployed. 47%. That's June. The U.S. dollar, obviously, we see the weakness in that. The current landscape, to me, is worse than it was in 2008. And again, we got these second quarter numbers coming out. These are huge hurdles to overcome. And again, looking at the front of the Wall Street Journal, You'll see Airbus cutting 15,000 jobs across its commercial aircraft division.
But their stock price went up.
But yeah, and same, you can see stock price go up in Shell because they're writing down the value of its assets by up to $22 billion, and Exxon refuses to. And so there's all these games being played from a bookkeeping standpoint too. But all that being said, put on your seatbelts. In my opinion, the worst is yet to come. So let's wrap it up, and let's not forget, we're thankful for where we live. Independence Day weekend. We hope you have a safe and blessed weekend. And thank you to all of those who have sacrificed over the years to make sure that those freedoms stay intact. Keep up the good fight.
We thank you for joining us for Golden Rule Radio. If you like what you heard, hit the subscribe button, ring the bell, join us in the comments. If you have something to add to the discussion, we certainly want to hear it. If you have any questions, you can find more info on our website, McAlvany.com. We're on Twitter at ICA Gold or Facebook at McAlvany Financial. And as always, if you want to have a sit-down, discuss your personal metals portfolio with one of our advisors at McAlvany ICA, you can give us a call at 1-800-525-9556.
Thanks for listening. Have a great week.